In this lesson, you're going to learn how to answer the common interview question of walking the interviewer through a merger model analysis. Now, the first thing to note here is when you get a question about how to walk someone through an accretion dilution model or merger model, as we call it here, you do not need to go into all the detail that we have here, especially on items like goodwill creation, balance sheet adjustments, synergies, all that stuff. Really, they're looking to see if you have a basic understanding of how to make the assumptions in the beginning and then combine the company's income statements. So the level of detail that we have here in this model is completely unnecessary. And it's actually a bad move if you try to go into that much detail. You should try to keep your response to around 30 to 60 seconds at most, because if you go beyond that, they're probably going to cut you off. So keep it concise, and then at the end, if they want more detail, you can ask about it and say, is that enough, or do you want me to go into more detail on anything here? So when you get a question like this, I would probably say the following to walk someone through a merger model. In a merger model, you analyze the impact on a company's earnings per share when they buy another company based on how they buy it, cash, debt, and stock, and then what the financial profiles of the buyer and seller look like. The first step in a merger model is to assume a purchase price for the company and then how much they're paying in terms of cash, debt, and stock. Step 2 is to look at the financial profiles of the buyer and seller. Step 3 is to project the income statements for the buyer and the seller. And then once you have that, you go in and combine the income statements for the buyer and seller. Then you take into account the acquisition effects, so the foregone interest on cash, the interest paid on new debt, and then the new shares that you're creating if you're using stock to buy the company. And once you've taken those into account, you calculate the company's new earnings per share by taking the pre-tax income and applying the buyer's tax rate to get to net income, then dividing by the share count to get to earnings per share. Once you have that, you can figure out accretion dilution by comparing it to the buyer's original standalone earnings per share. So that's an example of how you could quickly walk someone through a merger model like this. And again, it's possible that they want more detail or they want you to talk about one item in greater depth, but rather than doing that at the beginning, I would suggest doing a very simple walkthrough as I just did, and then at the end you can say, is that enough, or do you want me to go into more detail on anything there? And if they have follow-up questions or they want to go into more detail, they can tell you about it then. But I would always start with something simple that gets across the main 4 or 5 steps that you need in a model, and then ask if they want you to go into more depth on anything that you mentioned. So that's probably the most common interview question on the topic of merger models. Coming up in the next video, we're going to be getting into other interview questions that go into more detail on specific aspects, such as the assumptions, the synergies, the goodwill creation and balance sheet adjustments, and you'll see the kinds of questions you can expect as well as how to effectively answer them.